So despite the sizable correction from the highs, crypto realized and implied vols have been falling throughout the week. BTC realized down to 72, ETH down to 78. So both of them dropping order of magnitude about 10 points. Implied vol getting dragged lower as calls getting dumped on the break of supports. BTC volatility carries coming in at around 0 right now, which we can see here with those red bars kind of sitting around flat. We do still have negative carry in ETH, saying that realized is a touch higher than implied right now. And that has kind of been the case in ETH for a little while. Now, Solana is the real move. I haven't got a Solana chart or anything here, but Solana skyrocketed from 150 to 210, which is a 40% rally last week. And then after touching 210, it's come back down to like 180. Maybe it's even lower now. I haven't checked, right? But this thing's an animal. Now, they have listed Solana options on Deribit. They are USDC settled. And problem is, they're only out to 29th of March right now, 28th of March. So I don't think, personally, I'm not playing in such short-dated options unless I'm overwriting. And I don't want to really overwrite my Solana because I have no idea how high this thing could go. And my position in Solana isn't so big that I feel the need to overwrite it. But when, hopefully, fingers crossed, when they list some longer dated options in Solana, I will be licking my lips and I will be putting on some medium-term upside structures that make sense, because I think Solana could do crazy stuff this year in this bull run. You know, if we kind of look at an analogy of what Ethereum did in the bull run back in 21, I mean, that hit lows of $100, and within the space of like a year or so, it went to 5,000. Okay. Now, who knows if Solana can do the same, but going from, I got in at 35, it went to 10. It's gone from 10 to 200 since the lows. And, you know, I wouldn't be surprised to see 1,000 at some point on this thing. So for me, I'm not looking to overly hedge out my Solana when the thing could easily be a 5x from here. Once it's a 5x from here, then I might start to, once my pot is a bit bigger, I might start to then do the type of things I'm doing in Ethereum and Bitcoin with it. But it's too young. For me, it's too young right now in the cycle. So I'd rather let it breathe and do its thing. And if anything, I will buy optionality to leverage that position to make it even bigger, right? That's kind of how I look at it. Okay. And, you know, we said, once again, crypto looks like it might have become a macro asset for a little bit. ETF flows were the only game in town, not so much now. FOMC on Wednesday. If it moves rates, if they move the dot plot, then it probably does impact crypto and all the markets, to be fair. So that is the thing to look out for. All right. In terms of term structure, flattening back into a bit of a contango, you can see here. So front end down the most. Back end actually higher. So we've got about a 5 vol point increase in the back end on Bitcoin, a couple of vols in Ethereum. Similar story, front end coming down, back end either holding or going bid. So about a 7 vol point drop in the front end in Bitcoin, about a 5 vol point drop in Ethereum. Longer dated in both the assets are sitting at about 80 vol. So interesting to see that, right? That 80 vol is just going bid. It's not even coming down on a week where realize has dropped. The whole curve is kind of, the front of the curve is deflating. They're happy. It's basically showing you that in the dip, people are still happy to buy long dated calls, right? All of that Vega demand is not for downside puts, right? It's for upside calls. You can tell that because the call skew is quite steep. You can see here, the call skew is like 6 to 7 vols in Bitcoin in the long end, 8 to 9 vols in Ethereum. Whereas in the front, we've actually flipped into put premium. We've got an 11 vol put premium in the front, and we've got a 6 vol put premium in the front for Bitcoin, but 11 vols for Ethereum. So really this massive divergence between what Skew is telling us in the front end and what Skew is telling us in the back end. But to be honest, it's telling the same story. This is a correction. We've had a parabolic run. We're correcting right now. We could have further to go, but longer term, buy the dip. That's what it's saying. Okay. All right. Jumping over to relative value. You can see relative value wise, we've seen a bit of a shift Front end not doing a lot, so still got a slight premium on ETH, but we've seen that collapse back down as long, and that's more coming from long-term Bitcoin catching a bid than Ethereum long-term getting an offer. So, but the spread has come back to zero, maybe even slightly in favor of Bitcoin in the long end. So this spread's moving around. I don't have a lot of conviction on this spread, which is why I've exited my call switches, as you guys know. As and when I do have conviction, I'll let you know. Right now, the realized is still in the favor of Ethereum. So it's like if I had to gun to my head at flat, I'd still own Ethereum vol versus Bitcoin. It's just that I know that Bitcoin has this habit when the inflows restart again, you know, Bitcoin's going to basically fly. And if it does that, then it might leave Ethereum behind. Okay. I mean, if you look at what the spot spread did, it absolutely tanked back towards the low end of the range. Ethereum, like I said, has come off harder than Bitcoin has this week because that ETF narrative has gone for now. No one really thinks it's not going to happen, but it's just going to be delayed. So if we don't have clarity on the timing, then people are like, well, why am I going to bother putting my risk chips on Ethereum? And also maybe I'm better off in Solana. There might be some Solana switching where people are switching out of ETH and into Solana. That's very possible as well. Okay. And you know, that's why on these spreads, it's like you need to see if there's any alpha, right? The whole point of these spreads is you think they're relatively crypto neutral and there's some alpha to be had. If there is any alpha right now in spreads, I think it's more owning Solana than it is Ethereum right now, given the excitement that we're seeing in that space. Okay. I'm no expert in Solana, by the way. I'm just going on price action and what I'm seeing there and the fact that now that options are listed as well, that kind of helps. Okay, already really mentioned, probably not that much new to add on the skew that I haven't already said. We saw the signal last week as we saw a put premium come in on Ethereum front end. That was your signal to de-risk. We listened to that signal. We took off our June calls that we were sitting on ETH. That turned out to be a good trade. I do think, you know, at 11 vols in the front end, the put skew is starting to look a little bit overdone, but it shows that people need it right now, right? Maybe people got a bit too long, a bit too optimistic, and they're like, oh, we need the protection. So, I mean, it can get more extreme, right? It can go to 20, even 30 vols if it wants to, this crypto skew. But looking at 11, 12, it's starting to look pretty toppy. It's interesting as well at the same time as seeing that the call skew is going bid in the long end as well. So it's not just like this fundamental bear story that are like Ethereum's toast and it's going back to 2000. If that was the case, if that was the thought, then call skew wouldn't be going bid, right? It's just that people are a bit panicked right now, got overly long and need the short-term protection. I do think 3,000 is a huge level. I think 60K is a big level on Bitcoin. I think using those two levels as your kind of support zones and even selling short put strikes at those levels as part of bullish risk reversals, that can make sense. If you did lighten up at the highs last week, you must be feeling pretty good and pretty happy about it. And if you don't want to miss a bounce, if you don't get to your target levels that I'm talking about, 3,000 and 60K, if you don't get there, you won't get to buy at those levels if we just rally from here. So one way to kind of play that, it might be to sell the put at those strikes so that you can buy some calls for zero cost. Just sit on that in the short end, waiting in case the bounce comes before you know it. And if we do go down, then you've got a chance to purchase your cryptos at the levels that you want, and you can take the delta one basically if we go down there, right? So those are kind of ways to think about it. All right, dashboards, nothing really to say on that. Flow-wise, volumes were small down, but still 14 billion, right? In terms of Bitcoin, still massive. Two-way flow, though. Traders still believing in the halving rally. So we still did see buyers of some upside calls, some call spreads in April, 70, 90K. That looks like a halving trade. Longer dated calls, September 90K calls were bought. That's a more medium-term fundamental trade. We saw decent chunks of March, April 75 call calendars being bought as well. On the protection front, as we broke below 70K again, we did see put spread buying with 65K, 55K put spreads being bought in March. We also saw bearish risk reversals in April using the 63 put funded by the 90K call. And we saw some outright puts generally as well across March and April expiries. Those are your flows in Bitcoin. In Ethereum, volumes also drifting, but still healthy at 7.5 billion. More aggressive put buying probably seen in Ethereum. Like I said, it was driving the weakness more than Bitcoin was. We saw put buying kind of 3,600 down to 3,100 strikes, as highlighted down here. 1 second. Okay. And then some bullish trades as well. We saw April 5,000 calls being bought. We saw the 4,000, 5,000 bullish risky also being bought. But there was also an interesting trade on the on-screen flow. On-screen flow saw a short cover of the 2,600 calls, deep in the money calls, and then reselling of higher strikes in 3,900 all the way up to 4,500 area. So that looks like an in the money call, a call overwriter who got kind of run over in that move, but may have waited for a pullback, got the pullback, and then started buying those calls back to resell something with some out of the money premium on it, so that thing can decay and actually make them some money back, basically. So it looks like someone executing that type of trade there. In gamma positioning, we've seen a bit of a flip in both Bitcoin and Ethereum. So Bitcoin dealer gamma flipping short as some put buying comes in on the sell-off. Dealers now look like they're long the 65K and the 60K strikes to March. So those are the long strikes, but we do have some short strikes locally in terms of for this week. So we are still in small negative, but I would expect once this week plays out, we're going to go back into positive gamma for Bitcoin. Ethereum was in negative, but has been moving higher. You can see the big short area is kind of that 3,600 to 3,300, but we are heading pretty quickly towards the long strikes. Long strikes start at 3,200 and 3,000, and even down here at sort of 2,800 as well. So the more we go down in Ethereum, the longer this gamma positioning gets, and probably that means the better supported the market will be from the option space. Now, if there's other selling going on and it's outside of the option flow, which clearly it can be, options is not the dominant driver of what happens in Ethereum by any stretch, then that positioning might get blasted straight through. But in the absence of any other materially game-changing flows, if we do find ourselves drifting down towards 3,000, I would expect there to be slightly better support coming from the ETH dealer community. That's the summary for this week in crypto. Thanks a lot. As always, I'll catch you guys later.